Hey everybody, Economic Ninja here. I hope you're doing great. The dollar just got downgraded by Morgan Stanley. We're going to talk about that today, but it's good news. I know it sounds crazy that it's good news, and we have to find the positive in all of this stuff. How many of you are happy that you bought gold a couple of years ago? Think about this. I mean, we are seeing a transformation of our country losing the dollar's reserve currency, and I know it sounds crazy. You're like, how could you be happy about that? But for any revolution to happen, there has to be massive change. And I know that I am, and I believe that a lot of you are out there trying to get ready for what is coming. We see the change ahead. And let me ask you this too. How many of you in the last couple of years had no idea how economics worked, how the dollar had superiority over the world? Sure, we knew it, but we didn't really know how it had its grips into the world and what was happening with this whole China and Russia thing where they were trying to break away and wanting to start their whole new own currency. Now, in the last couple of years, as people are waking up to this, they're starting to see opportunities. And that's what I want for you. You have to look. Look, here's the truth. The bearer of bad news, I'm that guy. And all I do, I'm just reading other news stories. I'm showing you what's happening in the world. And people are positioning themselves, getting themselves ready. Why? Because pride comes before a fall. Our country has gotten very prideful. We have went from helping other nations to hurting other nations, and we're going to be dealt with. And I want to see us be able to get the reins back. When I say us, I'm talking about the lower middle class. The truth is, poor people are poor for a reason. 99 times out of 100, it was based on decisions. All right. You are in control of your life. Yeah, sure. You could have been thrown a curveball. I've had that happen before. Things that were completely out of my control. But you know what I did? I had to dig out of them. And that's what we need to do as a nation. We need to dig out of this problem right now. How do we do it? We take back the wealth of the nation. So as I tell you this story, and this comes out of Watcher Guru, it's about Morgan Stanley just downgrading the dollar. Banks and credit rating agencies are starting to see the writing on the wall, and they're doing it ahead of time this time. Unlike what happened in 2008, where you saw Fitch, S&P, and Moody's downgrading banks and things like that way after the fact. Now, the sad thing is, it's still after the fact. Banks are already crashing. The Federal Reserve has emergency powers like right now, they are flooding the banks with liquidity. They're actually crashing. And what's even crazier this time is it's so in your face, it's all over the news, and still nobody really gets it. There's still such a small population. Well, you're in that population, and I want you to hold your head up high. That group is growing. It's been made very clear to me that there's information that I've shared in the past that they don't want getting out. And you know what? That gets me pumped and excited because I am here to warn the nation to get ready. And you know what? Getting ready, straight up, it ain't sexy. But I will tell you what, there's nothing really exciting about it. But there is a sense of pride you have when you know that you are doing something better for not only your family and your community, but also the nation. And that is getting ready to take advantage of this crash because whether you like it or not, it's coming. All right, here we go. BRICS out of Watcher Guru. It's entitled Morgan Stanley Downgrades the US Dollar. It says multinational investment bank Morgan Stanley downgraded the outlook for the US dollar from bullish to neutral on Friday. The global bank cited that the Federal Reserve initiating interest rate cuts led to the decline in US Treasury yields. Then isn't that funny? They haven't actually done anything. They just said they're penciled it in. Pencil means nothing, 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 nothing. It's a nothing burger until it happens, right? It's just like when Jerome Powell in December of 2020, I believe it was, he said, you know what? We're going to get on top of that inflation that's happening. We're going to go ahead and get on top of it. It was 2021. We'll do it in like 4 or 5 months from now. See, if there was a problem with inflation, you should get on top of it. But what people don't realize is they actually want inflation to get a little out of control so they can run rates up and squeeze the economy. Then over a few years time, the banks start taking back properties and they get bigger and bigger. Okay. That's what very few people understand. Now, also, you're noticing in the news that they're touting that the US dollar has had its strongest year since, I want to say 2016, maybe I'm not off number, but it's had one of its strongest beginnings of the year in quite a long time. I still think this is absolutely a nothing burger. All right, let's see here. It says that it downgraded from bullish to neutral, and it says that, Holy cow. The downgrade comes at a time when the BRICS alliance is advancing to uproot the US dollar's global supremacy. It says surprisingly, Morgan Stanley was the only bank that provided fodder to the US dollar, terming the currencies bullish last year. The bank has now taken a U turn, calling the US dollar's prospects neutral in global markets. So think about this. They went from going, it's bullish last year to whoop, sorry, what did we do? And that just goes to show you, thank you so much, Chance, for the super chat. This just goes to show you that we are in a moment where even the banks are totally screwed up in the head. They've lost it. That one day it's bullish, next day it's neutral. Make up your mind, Morgan Stanley. It says the US dollar's index is on a steady decline in the last 3 months and currently stands at 102 points. Goldman Sachs has already termed the US dollar as bearish in December last year. Now, this is boding very well for gold. Gold's sitting over $2,000. It's been sitting there for a little bit of time. Do I believe gold price can go down? Absolutely. During a panic and during a stock market tanking or a crash or a correction, whatever you want to call it, gold always goes down. People don't realize that. And what you need to look at is the percentage it goes down as in correlation with the percentage the stock market goes down, or in correlation with how much real estate goes down. See, the name of the game during a crash, right, or a big heavy correction or a deep recession is holding on to as much value as you can. You know, I've talked to people when I was consulting a while back in real estate with real estate. I used to consult real estate investors. They would show me their whole portfolio. We'd look at it and we'd come up with neat ideas for how they can either expand or contract and de-risk their portfolio. And one thing I said, you know, there was one person, they said, look, I'm going to be I'm underwater on this property. And it was a property, let's say, I'm going to throw out some so nobody knows what this is. Let's just call it, they paid $500,000 for the property, a rental, and it's now worth 350,000, sorry, because there was a correction. This was a while ago. This is a long time ago. It's worth 350,000 bucks. Trying to come up with numbers off the fly, okay? First question I asked, and they were so beside themselves. Now, they had enough. They didn't have a lot of debt on it. So if they sold it, it wasn't like they were going to, you know, not pay the bank. So I asked them, I said, well, where do you want to buy? And they showed me an area. And I said, well, let's look at the prices and see what the prices have done. And they said, yeah, they've came down, but not that much. And we looked, and on a percentage basis, the property that they wanted actually had come down more on a percentage basis than they had seen lost, even though it's just lost until you sell it, right, on their property. And I said, you know, it's interesting how you just tweak something and look at something just a little differently. And the percentages never, ever, ever lie, all right? Percentages take away emotion when it comes to investing. And I told him, I said, look, so you sell your house at 350, you're looking at the loss. It used to be worth 5, it's now 350, but the ones you wanted have actually dropped more. So, and looking at the rents and all of that stuff, we said, there is more value in selling that property at less than what it used to be worth, not at a loss. It wasn't a loss, but it's less than what it was worth. And then going and buying the property that you actually wanted. And you could see their eyes light up, but that's the thing. Most people don't see that. And that's what's happening right now. Morgan Stanley going, it's bearish, it's bullish, it's neutral. They don't know which way it's going. What you need to look at is the constants. Where's this value of the stock market in relation to the value of gold, in relation to the value of real estate? And when everything comes down, and everything will come down, cryptos will too, you look at, I'm holding on to as much value as I can and then positioning it right in the right times. Now, they said that the US dollar is on a steady decline. It says the US dollar index might dip to 100. And if it slips to double digits, local currencies could begin to strengthen. The development coincides with the BRICS agenda to de-dollarize, where they plan to get rid of the US dollar for trade. Now, think about this. Remember, where I've talked about emotions and how important emotions are. That's 100% why stuff goes up and down. That's it. It's based on human emotion. How much money or how many people are diving into an asset as opposed to how many people are bailing out the window, okay? And the bailing out the window part, you know, they say bulls go upstairs and bears jump out windows. It's because steady climbs in stock markets are like this, just low trenches up. But then all of a sudden, a handful of people jump, and all of a sudden everybody goes, and it just causes markets to go free fall, right? It's because of emotion. Now, if we see the dollar index dip down into 99, 98, 97, now double digits, that turns into a psychologically damaging event for a lot of traders. Okay. Set aside, technical analysis. Just think about the emotion. And that's when you start seeing, and I'll give you an example. You want to talk emotion? When the stock market crashed in 2008, when Lehman was going down, was it Aaron Burnett that was crying? I think it was Aaron Burnett was physically crying on TV because she was like, this is horrible. It's tons of emotion. You saw people stressed. Yeah, you see the videos of traders on Wall Street, the eyes, oh my gosh, this is insane. How many of them are freaking out as opposed to how few of them are looking for an opportunity and going, all right, there's got to be a deal here. When the stock market was crashing in 2020, I got to buy oil futures at negative. Let's see, where were we? I want to say it was like at negative $18 when I bought call options. That was awesome. When people were panicking and freaking out, watching the news, I remember in my real estate brokerage, people are standing there watching the news. They're just watching the TV, watching the ticker. And I'm on the computer and I'm looking for the biggest drops. And that's when I found the oil trade. And I went, I'm buying. And they're like, what are you doing? Everything's crashing. I'm like, I know, isn't this awesome? And they were looking at me like I was a madman, like I was insane, like I was unpatriotic. Like it's patriotic to just sit and stare at a TV and just freak out. That's not what I'm called to do. And that's not what you're called to do. See, we're here to get ready and deal with the minutia, the crap. Let me tell you a little story about something else I want to say. I had a real estate agent that took my course. Seems like a really nice person, and I had complimented a professional real estate agent, complimenting the course, how awesome it was. And then this person said, "Could you please dial down the doom and gloom?" Now we are, and this is what the person said. We are now seeing interest rates going down. And here, I've been telling my clients that they're going to keep going up, like you said. And I got to be honest with you, it's hard to have patience sometimes with people because there is never, ever, ever in the history of the economic ninja where I've said things go straight up or straight down. Matter of fact, I talk about it all the time. I give the analogy of housing prices. Well, over time, this is what a house chart looks like. It's going up. It's fluttering your way. Look, it's a good time to buy. It's always a good time to buy. Because your purchasing power of your currency is being destroyed through interest rate manipulation and the printing of money. That's why. But what people don't realize is when it goes up and goes down like this and flutters, and you get it down to a slower point, and it's just going on up. People are making money. People are losing their home. People are making money. People are losing their jobs. People are making money. And you know what's funny about most humans? Boop. They never sell. Boom, they lose everything and they panic. Boop, they never sell. I know that from trading cryptos. I've seen it in my own life where I've held on too long and not cashed out. That's why I always have and I tell you all the time, when something doubles, I pull back profits. I learned that lesson the hard way. It's everybody that's running for the big money, they always lose everything. And like I've said before, and I warned everyone, I said the Fed may do a political move. I went very in depth on my course, and then I did free videos about it on this channel and on the Real Estate Ninja. If you haven't seen that, it's a whole different channel. It doesn't only cover real estate. If you don't mind checking it out, my point being, it's called the Real Estate Ninja. Point being is that they're going to do something for political gain. We have seen some crazy stuff happening in the world, all for political gain. Please understand me how serious this is. And the Fed has done this 4 times since 1972. 4 times where they run rates all the way up, smoke them up hot. Everything's hurting now at the top. They drop them just a little bit and then they go, oh crap, we didn't get in control of it. And then they shoot it way past. And it usually shoots about 20 to 30% past where it originally had 3 out of the last 4 times. When you take into consideration, if it goes from, let's say 0 to 5 points, it'll dip down a little bit and it'll moon shoot another 2.5. The point being is that people can't be strong enough to go, yeah, I can see the long-term trend. Long-term trend is interest rates going higher. That's what the banks want. I know it sounds crazy. The banks want it because they're going to take your stuff. But anyone worth, I mean, it's insane to me trying to get people out of wrong thinking, looking at what's happening right now and looking at what's going to happen a month from now. Start looking back into history. The farther you go back into history and look at interest rate trends, the farther you can see in the future. We are going to have double-digit mortgages before we see 3 or 4% mortgages. There you go. Timestamp this. Go do whatever you want. Put it all over the internet. Watch what happens. Bet against me. And if you're not thinking longer term, you're going to fail. That's how all failures work out. You didn't think longer term. You didn't de-risk enough. You didn't, everybody always goes for the big money. Right now, we've got a dollar that's in peril. It's so true because you can't even find a good treasury auction now. They're running 30-year, 7-year treasury auctions. People aren't showing up. We don't have the dominance anymore. The bricks are taking over. So as the dollar comes down in value, what are you going to be doing? Are you saving money? Are you buying gold? Or are you going to try and find a new car? If you can't, thank you, Norsman, for the super chat. If you can't pay cash for it, you don't deserve it. The American people need to hear that, and that's the truth. The only thing I would ever suggest, buy using a loan, 30-year fixed loan, is a home. Because that's one thing you can't fight the Fed on. When they allow debt at these insane levels, when I say insane levels, I'm talking about the duration of the debt. The car market changed severely when we went from 5 years to 7-year loans. Matter of fact, before 5 years, we even had lower loans. Every time a loan gets extended, that asset class increases. I warned everyone that a 40-year mortgage is coming out. It's now done. Fannie and Freddie have a 40-year fixed mortgage. It's not being used a lot. Why? I can tell you, it's what most people don't get. It's because it costs a few $100s more, it costs more interest. It actually saves you a couple $100s a month, but it costs more interest. And people can't get past that. Well, there was a day where the same difficult adoption happened with a 30-year fixed, where we had 15 and 20-year loans. There's like, no way we're paying more interest on a 30-year. But then people figured out, I could save a couple $100 a month. And then everybody dives into that product. And then it takes the entire asset class across the nation higher. Now, I do not believe we're there yet. I do not believe, especially because of this inflation bout we have right now, that people are going to be diving into 40-year mortgages. However, that is the go-to fix right now for many forbearance cases around the country. And yes, there are a lot of them. I know it sounds crazy. You don't want to believe it because it's not in the news, but there are. I talked to attorneys that are dealing with it. They're not putting it in the news. Why? They don't want you to know because they want you to be eternally optimistic, buy at the top, just like the dot-com bubble top, and just like the top of the real estate market in 2006. But remember, nobody calls it the Great Recession of 2006. They called it the Great Recession of 2008 because it took that much longer for the fools to figure it out. And when I say fools, I'm talking about the people that laughed at people like me. And I'm not bummed. Those people still won't talk to me. Every time they see me, it's like lumping hot coals on their head. It's because it took them 2 years to figure it out. And by the time they figured it out, they were losing their home. They're getting kicked out of their apartments. They'd lost their jobs. The layoffs already started last January. Not this January, last January. All throughout this last year. We're losing millions of full-time jobs. And people aren't paying attention. So here's the question I have for you. Are you going to get ready for this? And if I'm wrong, and if you're wrong, then what do you have? You've got savings. You have money in the bank. You've paid off debt. What, you didn't miss a little bit of a frothy top? Look at all the people right now. I'm sitting in a beautiful place right now that the owner tried to sell last spring and couldn't sell it because there were no buyers at this price point. And I asked him the other day, I said, do you have any other places? He goes, yeah, I sold a place smaller than this for even more in 2022. And I wish I would have sold this at that point too, because back then there were tons of buyers and the prices were actually high. It's one of the nicest places in the nation. But now there aren't as many buyers. Why? Because that price, that price of the property back then was higher because it came with a lower interest rate, lower insurance costs, lower taxes. Now, the homeowners in this area are fighting an uphill battle of higher taxes, higher insurance rates, higher interest. And the Federal Reserve said, we're going to be higher for longer. Better get used to those 6%, 7% mortgages. They may dip into 5.5 for a couple weeks and everyone will say I'm wrong. Yeah, bet against me. Look a little farther out. The farther you look into the future is the deeper you get to look, or sorry, the deeper you look into the past equals the farther you get to see into the future. And hopefully your financial future, you're looking into it now and you're saying it's bright. Type 1, if your financial future is bright. Type 2, if you don't know where to go. And if you don't know where to go, just obtain as much knowledge as you can. Stop listening to music in the car. Stop watching Netflix. Read books, listen to podcasts, listen to successful people, and start to mimic what they do. I'm gonna be honest with you. That's all I listen to is people that are more successful than me. I wanna be up there. That's my goal. I hope you got something out of this. Thank you so much for watching. Thank you to everyone that checked the unsubscribe button and see what just happened to the channel. I really appreciate you guys. You're awesome. The Economic Ninja is out.